Hey there, and welcome back to the HM Accounting YouTube channel. I'm Umaira Mullah, founder of HM Accounting, and I have spent over 15 years helping businesses not just manage their numbers, but understand them. Because numbers tell the real story of your business. This channel is all about making finance and business practical, simple, and actually useful. Whether you're a seasoned entrepreneur or just starting out, my goal is to give you actionable business and finance tips to help you grow. I hope that 2025 is off to a strong start for you. It is a great time for fresh goals, but the real key isn't just setting goals, it's tracking them. And here's one of my favorite business truths: what gets measured gets managed. That's why today we're talking about three essential KPIs, which are key performance indicators that every business owner should track this year. Don't worry if KPIs sound a little technical. I'll break them down in a way that makes sense, and I'll share simple ways to improve them if they're not quite where you want them to be. Sounds good, right? So let's dive in. KPI number one is our gross profit margin. Now, this is for product based businesses. It is an absolutely must track, non negotiable KPI for any product based business. Why? Because it tells you how much of your revenue is left after covering your cost of goods sold. Basically, it's your profitability snapshot. Here's the formula: revenue minus cost of goods sold, also known as your gross profit on your income statement of your financials. That's where you'll find it. You're going to divide that by revenue, and then you are going to times it by 100. For those of you that don't know, revenue is your sales or your turnover. A healthy gross profit margin means your pricing and production costs are balanced. But if it's lower than expected, here's what you can do. Number one is to review your pricing. Are you charging enough to stay profitable? Number two is to negotiate with suppliers. Can you get better deals on materials or on inventory? And number three would be to reduce waste. Are there any inefficiencies in your production process? Now, even small adjustments here can lead to major profit improvements. The other KPI, which I'm going to call KPI 1A, is revenue per service hour. If you are in the service industry, instead of gross profit margin, you'll want to track revenue per service hour because time is your most valuable asset. Here's the formula: it is going to be your total revenue divided by your total hours billed. Now, if this number isn't as high as you'd like, then here's how to boost it. You're going to adjust your rates. Are you pricing your expertise at the right prices? That's what you need to ask yourself. Number two is improve efficiency. Can you streamline processes without cutting quality? And number three is prioritize high value services. So focus on offerings that generate the best returns. Remember, it's not about working more hours, it's about working smarter. Your KPI number two is your current ratio. This one is all about your business's financial health. It measures whether your short term assets can cover your short term liabilities. And you're going to find these amounts on your balance sheet of your financial statements, right? Your short term assets are things like your cash, your debtors, your inventory on hand. Your short term liabilities are things like a credit card with the bank or a bank overdraft and any maybe liabilities you are owing to SARS, things that are short term, as well as payables to your creditors. The formula is your current assets divided by your current liabilities. Very easy. A healthy ratio is a ratio above one, meaning that you have enough assets to cover your obligations. But if it's lower, don't panic. Here's how you're going to strengthen it. One, you're going to boost your cash flow. So you need to follow up on unpaid invoices sooner, and you definitely need to set better debtor terms in place and give them incentives and also penalize them on late payments or incentives to pay early. Number two is cut unnecessary expenses. Reevaluate spending and trim non essentials. Number three is to plan for debt repayment. Can you refinance or restructure your short term? Consider refinancing short term debt if needed. Stay ahead of cash flow issues before they become bigger problems. Number three is your customer retention rate. So, finally, let's talk about your customer retention rate. Why? Because keeping your existing customers happy is way more cost effective than constantly chasing new ones. The formula for this is your customers at the end of the period minus your new customers that you obtained during that period. You divide it by your customers at the start of the period. You take that number and you times it by 100. If you want to increase your retention, here's how. Stay engaged. Regular check ins via email, social media, or calls. Offer loyalty perks like discounts, exclusive offers, or rewards program. And ask for feedback. A simple how can we serve you better can lead to fantastic insights. Loyal customers means long term business success. So do invest in them more. And that is a wrap. Your three essential KPIs to track in 2025 are gross profit margin for your product based businesses and revenue per service hour for your service based business. It's also going to be your customer retention rate and, of course, your current ratio. Start tracking these today and remember that small, consistent improvements add up. If you want to dive in a bit deeper, then check out my blog post for more insights. It's called Three Essential KPIs Every Business Owner Should Track, and I've put the link in the description box below. If you need an easy way to track your numbers, then I definitely recommend you getting our financial ratios ebook. I will put the link in the description box for that ebook as well. It's a must. If you have any questions or any goals you'd like to discuss, then please drop me a comment or reach out. I would love to chat. Thank you so much for watching. If you found this helpful, please don't forget to like, subscribe, hit that notification bell so you never miss a video. And let's make 2025 the year we take control of our numbers and grow. See you next time.